Over the past 6 months, there's been some notable shifts in the Perth housing market. The first 9 months of 2012 was very much a very hot rental market, and it's still very warm, but what we have actually seen is an increase in property available for rent in the last 6 months. At the same time, we've actually seen an increase in house sales activity. And this has been very much driven by strong first home buyer activity since 2010. But finally, we are starting to see some real trade-up buyer activity over the last 6 months. And this has really come on the back of rising consumer confidence. This is probably a good place to look at the shifts in the market. So firstly, let's look at our first graphic, and this is our weekly Perth house sales information that we publish to the media and also onto Reiwa.com each week. What we can see is the data over the last 3 years, the rise in the average annual sales from 2011 through to 2013, represented by the black bars. More particularly, let's look at the last 6 months, and we can actually see the December quarter, the overall strength in activity there, and then the further rise in the first 3 months of 2013. So looking at our weekly data in more detail, our monthly graphic of house sales activity shows the strength of the activity in the March quarter by the orange bars. In addition, what we can see is the increase in the median house price, which is represented by the black line. And there's been a sharp rise, but the monthly data remains volatile. We can remove some of that volatility when we look at the more detailed long-term quarterly house price chart for the Perth market. And there we can actually see the volume increasing, we think by somewhere in the order of some 7 to 8%. This has taken the volume of overall house sales in Perth back to its long-term 15-year average, and this is the highest level we've seen since 2009. The other thing that's evident on the chart is the movement in the median price, which is the red line. After dipping to $480,000 in the September quarter of last year, we saw a 4% rise in the median to $500,000 in the December quarter, and our Reiwa.com data suggests that we will see a 2% increase in the median price to $510,000 for Perth in the March quarter, which is a new record, eclipsing the previous $505,000 peak in March of 2010. So what's important to understand is that the shift in the median house price doesn't necessarily mean we've actually seen a shift in values. As I've indicated, we've seen a marked shift in trade-up activity, and it's very evident when we look at the sales price distribution. We've seen a lot more sales activity in the price ranges above $500,000 in the March quarter compared with the September quarter from last year. While we've seen that increase in activity above $500,000, that's not to say that we haven't seen strong first home buyer activity below the overall market median as well. And those, of course, the first home buyers have been the market sector that's been absorbing a lot of the listing stock over the last 2 years. We've followed it down from 18,200 in April of 2011 down to something like 8,300 at the end of March 2013. I guess what's important is to probably put the level of listings in context. It's been sitting below the overall market equilibrium of some 12,000 for some 9 months now. When we look at this graphic, we can actually see that we've come from a period of nearly 5.5 years where the overall stock of listings has been sitting above 12,000 since the end of 2006, or despite a brief period in late 2009 where it did dip below that equilibrium. That said, there's been a lot of commentary out there about the level of listings activity or level of listings available in the marketplace, and it's pretty important to put that in some context. 8,300 is very similar to where the market was, surprisingly enough, the same quarter 10 years ago, March 2003. And it's still well ahead of the 4,800 that we experienced in the June quarter of 2006 at the height of the boom. Turning to our last health check on the market, the rental market, and this is where, as we indicated, there was very strong demand in the first part of 2012, which was sort of the vacancy rate plummet down to 1.8, 1.9 for much of 2012. However, in the December quarter, demand softened and we've seen an increase in listings available for rent. And surprisingly enough, while we traditionally see a fall across the March quarter, in 2013 we've actually seen that the amount of property available for lease actually increasing, to the point where we've actually seen a 51% increase in stock available in the rental market over the last 6 months. Now, if we compare this with the same 6 months in 2011, 2012, there was actually a fall of some 18% in rental stock. So The demand for rental stock certainly hasn't fallen, but the available property has increased, and that's very much around increased property being freed up by first home buyers moving into their own property, and also additional investor activity. So in summary, the market has undergone a pretty solid rebound over the last 6 months, and there's been some very interesting things happening, say even in the rental sector. While house sales have increased, so too we've seen an increase in multi-residential activity, but that still remains soft with weak investor activity. The land market is also showing some real strength as we're seeing increased building approvals come through the system. So while the market has shown some very strong signals, we're very much back into a buoyant level of activity, but far from a boom.